What is going on, everyone? He's back. The dog is bull market. Is confidence back? Because when you look at this guy, you think bull. Are we getting towards the end of the rally? Today is Monday, March 24th, 2025. Pleasure to be with you. If you like what you're hearing, technical analysis here, going through the charts of these crazy markets, subscribe. I don't know how many more of these I'm going to get to you this week. As you know, the wife's due date is upon us. So going to give, my usual forecast. Let me show the doc and we'll get into it. Market, pretty much in line with what we were saying for Friday, a bullish accumulation phase. Today, we had a real big driver of it. Some of you like him, some of you don't like him. But his stock was major mover today. It was Tesla. And this one looks like it's flying or hitting this guy, but he seems pretty happy about it. I'm getting like Meet Joe Black vibes. But so Tesla's 12% rally rise today gives consumer discretionary, the XLY, a 4% jump, while the IDWs, the small caps, Russell 2000 climbed 2.5%. And bonds had a pretty, wasn't a two sigma day. It was actually a 1.3 sigma day. But you did have a rally in yields as they did put pressure on bonds today, as it was a nice market day and volatility really slipped down 5%. So we'll take a look at that. Big movers today. We're going to be looking at consumer discretionary, retail, and Russell, and I'll tease that for the upside. Downside, it was really just the bonds. We'll focus on TLT, and we'll look at the best trades, of the week that have been crushing it for the past 5 days. All right. So without further ado, let me see something here. I am tired for asking. If you have a ticker or something, put it in there. I'm assuming I know how to read it, which is a big assumption. And I'll give you a forecast on it. How about that? Where are we at? Here we go. All right. So Tesla, like I said, up 11.9%. Stock still does not look amazing, but it's gotten to 280. Today's the ETF show, so I'm not going to get into the weeds there. But this was a huge mover of XLY. If you are not familiar, XLY is basically comprised of 50% of Tesla plus Amazon and Home Depot. Amazon basically did in line with what the basket itself did. We'll take a look at it closer. But Amazon did up 3.6, Tesla up 12%, monster move. NVIDIA up 3%. Stock still does not look so great. We'll take a look at at SPY, of course, shortly. Palantir, a strong mover. We said that's best in breed. Always a line to buy that stock, up 6% to $97. Call it. Meta, still a star, up 4% or so, up to 619. That is a above average stock. And Amazon up 3.5%. And MicroStrategy, just strategy, up 10%. Bitcoin itself up to about 88K. Strategy looking good. When is strategy not looking good? I guess if you're just half-assing a game of risk. Long game, that game of risk. And it's good to be in the long game when you're in the markets. Let's see. Netflix also adding today up 1%. So enough of that. Let us go to the intraday chart here. So this is SPY, an above average volume today. Remember, we saw a surge of buying on Friday after we bottomed at 10:30 a.m. We got that 558 low on Friday, and then there was that surge of buying at 3:30 that sent us to 565. And then today, really the low, the cheapest the market was this morning at 9:30. You were at 570. A nice trade holding above VWAP. Couple scary moments there till the 2:30 hour, where we actually were not overbought for just one period of the day. Literally 2 o'clock, we slipped below VWAP, which is 570, 280. And then woof, a spring fourth at the 3:30 hour, all the way to 575. Overbought largely the entire day, actually since 7 a.m. With these, as you can see here from my data provider. As I zoom out, I've been talking about before how we are in a bullish accumulation phase ending on or around Friday, March 28th, and that takes you to the level I called before. Let me pull it up here. It's largely comprised of the 21-day exponential moving average, 574. Where are we at today? 574. What's the 200-day moving average? 574. And if you look at the put call skew, that's actually a massive level where sentiment, potentially very much changes, not potentially. So very, very important matters here. 574, which is where we were. I still say we have, in terms of duration, Still a couple good days here this week. It's getting very, long in the tooth here. This is pretty much a stomping ground where it has to make its mark here. So very, very important level, multiple ways. 574, I've been having my eye on this for quite a while. Whenever you doubt the market, what always comes back is resilience, resilience, resilience. You'd be a fool to deny that. So what I'm calling for now, still, like I said, bullishness through on or around Friday. If you didn't notice, the market, a lot of the bullishness was about it was tariff news. Trump was saying that he's going to have a more reciprocated approach, and he's going to, delay some of them. And you had a 2% update in the market, and you're down, before this 4% on the year. So always, it really doesn't pay off much to be skeptical, especially when I have this chart. Yeah, it could be the change of something. Look at these glimpses of red here, oversold on March 11th and March 13th. Otherwise, superstar chart. This, we said before, you don't want to have this profile for too long. So it closed underneath the 200-day March 10th. We are still climbing. It's adding about 23 cents a day or so to its average. So March 10th through, what I say there? March 10th, yes. And today's the 24th. So this is 2 weeks of just literally below average performance. This is, seeing LeBron 10 years ago. I'm talking about LeBron on the Heat do, 6 points every night for, 2 weeks into the season, 3 weeks. You start to get concerned, but never doubt a superstar. And much like his averages to date, so is the, especially like mega cap tech, the top 50 S&P XLG has averaged 25% for the past, I believe it's 20 years. So this is an oopsie in time. Even Trump, Schmump, Harris, Schmeiden, don't care, won't care, is not going to ruin. Let me just zoom out here. Yeah. So typically I want to buy this chart, and a lot of folks got very, very concerned if this was the end of time, or could it be a 2 weeks underperformance oopsie, especially when you have shoots to the upside in markets like China, which still have a lot of room to go potentially if that's a real viable story. So this looks like a 2. So we closed above it today by the skin of its teeth, by about 40 cents or so. So for right now, it is forgiven. That is a moment back in time. And if we can get above 576, you will sustain above 50% RSI trading. The reason why I said before, the market has to find new buyers, why I think it's going to get tired is technical reasons of what we just said. It has to reclaim that momentum and slope. I'm not quite sure it has it. Next level that you'd like to see is get to 583. I don't think it's going to have it. Like I said, bullishness through the rest of the week. I think it's stalling right around here. Candle looks good. And then when you look at these levels here, there's resistance at 583. 583, I would say absolute max if it overshoots this week. I don't expect it to. And then, as you do, because I don't know when I'm going to get, often opportunities to do the videos again. And then into mid-April, I think just so happens, lines up with the kickoff of earnings, starting with corporate earnings, and then, of course, all the tech companies. And then I think the sell-off, the setup going into that will be good and lift the market higher. I think potentially the setup, like around tax day, April 15th or so, around the earnings star, I think the setup could potentially be, I think we could be sitting at, in the SPOOs, you might get a sell-off to about here. I think this holds again. I think potentially this gets revisited, this 560 level, through maybe some crazy tweets or who knows, maybe bad numbers or something economically, or CPI, who knows, or Fed speak. But I think potentially that is the setup in mid-April. But again, that's weeks away from here. Beautiful recovery, 2 weeks oopsie in time. And then, like I said, the overall trend, I believe, will go forth, and that is, higher. All right, let's look at what really went higher today. Where did that chart go with the Tesla hitting the guy? I'm just assuming that's not real, but you never know. So we're not going to look at the actual Tesla chart. We're going to look at what the major mover of it was, and that was the XLY. Very important fund. This is Amazon Tesla basket, essentially, with Home Depot. These guys peaked the day the Fed cut. Go look at that. December 18th at 240, and really just not looking good. This is the consumer, consumer is in the word, and this has been, when all the recession talk, this is not so great. Everyone uses Amazon, and more folks are driving those Teslas if they're not getting, the bird flipped on them on the road. So similar to the S&P chart, what we just showed you. So its ugly profile started March 10th. This was much more, as you can see here, oversold behavior. So this had also a very scary, moment in time here back in the Yen-Mageddon, August 5th, where it was under 200 days. So the S&P overall market held up better. But right here, same exact thing. It is above now. It's 200-day moving average, and it is approaching its 50 RSI. But similarly, as I said before, for S&P to get tired right around that 575 level, this one looks set to be exhausting right around its 21-day exponential, and that's 204 right around here, which is also its 200-day moving average. You're going to see this. I'm not Nostralama, although if I hit a parlay right, which is rare, I call myself that. I'm going to start doing that more. But yeah, forgot what I was saying. You want to see this continue to go higher, but this is going to be a theme of the market, I believe, that all these baskets, ETFs, critical markets are at critical points in the U.S. We'll see where we are because some of the Chinese equities sold off. But I think there's going to be a big turning point for the next couple of weeks of frustration. But it would probably pay to have have bullish bets, in my opinion. I think the worst was right around that March 15th. And we'll also take a look at the VIX chart later too. But in terms of XLY, yeah, similar to like what I said with the market bullishness this week. I think it has a little bit more to go. But in terms of target, it was pretty much 205. An amazing gasp would be to get to this 210 level right around here. I wouldn't see much more for it. All right. Again, never want to doubt the market's resilience though. Let's look at IWM. This thing's been an absolute dog, ugly chart. So this character change started in a big way, Feb 21. So this thing's been a loser, under the 200-day, and it's not close here. So, and the 200-day moving average is basically very close to flatlining. It's stuck at 218.5. And that looks heavy here. So don't love this chart. Small caps have looked bad for a while. Really fell out of bed here late February, 21st to be exact. I think this has a little bit in terms of duration. Again, I think you're going to see more bullishness in the market over the course of this week. In terms of where this can get to, similar to the last gasp I was describing in retail and consumer, 214. I do not think it gets to within 2% of this 200-day moving average. I think it still proves to be too heavy, and the uncertainty around the tariffs I don't think really help small caps, even though it comprise much of financials and energy. I just don't like the story, and the chart looks more and more like something that peaked Thanksgiving week at 245. So there's better areas to be in. We'll look at, semis moved massively today. We'll even look at Bitcoin. But I think this has a little bit potentially more of a gasp. Like I said, my target was for this to get tired right around 208. It's at 209. I am rounding. And if it has a little bit more jump to go, because potentially, folks want to chase and underperform in a catch-up trade, this potentially gets as high as, I think, 213, not a ton more than that. All right, the losers, and this was interesting. They only sold one thing off today. It was a rally in yields. They sold bonds off. This was a 1.3 standard deviation move. We're down 1%. TLT, my gosh, if this was a stock and we're looking at it, this thing has been absolute garbage since before Halloween. So since October 10th, which I think is Columbus Day, I have a splash of the tism with holidays. Everything is like a holiday. I think because we have decorations around the house and everything is indexed in my head, strangely. But yeah, so I'm not going to forgive this as an overperformance. This is like what basketball player can I make fun of? Ben Simmons today or any year, actually, after he was, trash for the Sixers. But this is like basically he scores, 30 points. That's an absolute overperformance. That is not the trend that is going to be consistent. And that's exactly what happened. This is not the trend, these performances. Unless it can really, really hold above. And that's TLT. You do not typically want to own this, again, because the relationship with yield, you buy bonds go down, yields go up, and, there's kind of an inflation worry and everything else. So here's the thing, though, with TLT. I'm looking at it just in terms of technical analysis. I do believe this has a nice 2 weeks ahead of it. It did not have a good day today, but I think this goes as high as the 200-day moving average, which is a brick wall essentially at this point, is stuck at 92.70. I think it's going to try and tussle with that. Just do make note that it has not done that this year in terms of 2025. Last time it did that was December 9th. It went above its 200 moving average. So tough work to do. It's basically very near its lows. The actual low was February 12th at $87. You're at 89.5 or so after this sell-off today. So a rise today in yields. Of course, they sold bonds off. You have a huge equity day. Folks want to get long equities, and they sold off all parts of the curve. You saw this TLT represents the 20-year. You had SHY, the 1 to 3 year, the 5 to 10. There's all the rates we're up today. All right. And the last thing I want to comment on this is it's largely, held above 40 RSI trading after really bottoming in January. Just something of note, small uptrend here. You can see almost a triangle here, but I do think it will stop in about 2 weeks or so, potentially even maybe an oops and it gets to that 93 handle, but then I do think it will go lower. Not a great overall looking chart. So that was the only loser today. Top 3 gainers of the past 5 days. Number 1, if you are in Ark, up 8.5% over the past 5 days, up 5% today. Of course, when you get Tesla up 12, everyone just did a little bit of derivatives in their head. You got XLY up 4, you got Ark, more concentration to Tesla up 5. So just a little bit of world of custom basket indexing. In terms of this, so Ark, great looking chart, peaked February 18th. These guys really, look at this. So March 10th, they fell out of bed and then it closed here. So they had an 11-day, to me, forgiveness, which is very short oversold. People saying, yeah, you know what? I don't trust Cathie Wood and the whole story. March 10th, 11th. And after that, I said, no, you know what? Look at that. The lower highs after that day, after the March 13th. He escaped oversold finally, and then it touched that 47.75 mark again. And now we shot higher. The 200 moving average is $51. This thing typically trades at a premium. I think this has, similar to the market, I really sound like a broken record, a little bit more bullishness this week. This has a stronger profile. The other stocks I was saying they're going to languish around the 200 moving average. This one I have a little bit more faith in given the profile. I think this has a little bit. It's about 56 or so. It's not going to be that easy, but this thing can move. Like I said, 5% today. You obviously have to see how much more the Tesla train has to go. But I think this has a little bit more to go to 56. And it wouldn't shock me. I'm not expecting it. But if it gets towards, even 57, I'm not really expecting that, though. But this one looks has a little bit more nice risk-taking here in Ark and getting paid off today through Tesla's big rally. India, let's see. This one's been the beat of its own drum. We looked at this on Friday. This one, ugly chart. These ones, India hit 52-week lows March 4th at 47.5. They had a big, week last week. And today, up 1.2%. So it's continuing. This looks like, so the top Bollinger Band, essentially before you really had this expansion, I have a different time frame on another screen, is right around 50.5. And now, thanks to these significantly just sharper, higher closes, it is now trying to me, make a run for the 200 moving average was at 54.30. I would have dismissed this before just due to, 52, 54 being quite a target adjustment, especially working off that low of $48. But this has gone, as you can see here, from oversold as recently as March 4th, all the way to overbought into March 24th. So that's just amazing. That's no one wants to buy tickets, for your concert, and then afterwards you're all over. You went viral, and it's sold out. So, and that's in a crazy 3-week relationship. Longer term, which I will always pay credence to, this is ugly breakdowns, and the 200 moving average is rolling over. So I think this is excelled. Yes, it could potentially go higher. I don't think so, given the longer-term profile. Absolute best, obviously, I don't think it's going to tussle. I don't like that word today. I don't think it's going to get with $50 to $54. But at maybe absolute top 53. But as I said, full disclosure, $50 was my full target. And I think this oscillates towards $50 over the next 2 weeks. I don't think you really want to be in this area. All right, but India, second best place to be in the past 5 days after Ark. And then the third one, Bitcoin. We haven't talked about it in a little bit in terms of being on the show. But look at this. Through IBIT, peaked December 17th at $62, call it, and then put in some successive lower highs here. Never even touched underneath its 200-day moving average, which is still going higher, and $44 is your support. Today was up 5%. So similar like India for all last week, although, of course, different vol profile. And here we are. We're going from $45 to $50. Now, what do we say about good old IBIT, which I am long? So this was kind of, so I'm kind of saying, getting ready for Bitcoin to get going, needs market help, waiting for it to get going, needs market help. So in terms of the accumulation phase and everything else, similar lined up with the market, see it continuing for this week. Looks like this wants to make a run towards $52. I wouldn't be shocked. I actually think it does it, and then it gets tired. So not clear blue skies ahead for any part of the market. All these assets have a lot of work up ahead. But yeah, this looks like it began really, I mean, aggressively March 10th, but I see no strength coming from March 3rd. So right here, if you see here, this is March 10th, but really it was weak ever since here, in my opinion. It really didn't do any. I mean, this was a nice day on March 4th, but overall, not a strong pattern here. And then March 10th, really sharper levels. And now, can it get above 50 RSI and really have the equilibrium of balance of buyers and sellers, or is it still controlled by the sellers? The buyers have been doing a lot of controlling for 14 days, and trees don't go to the sky. That's why you can't just go on the treadmill for 8 hours straight. You will die. Although I guess if you've seen that meme, the guy with puts his banana peel on his face and duct tape, and he's drinking Saratoga water, and he just wastes time one morning. It's kind of like that. All right, so that is IBIT. So best charts of the week to the upside: Ark up 8.5%, India up 5.5%, and then IBIT up 4.5%. Now to the downside, always love doing charts on the VIX, even though it is a non-time series, and you should really be careful with that. But it gives me kind of a visualization of volatility and kind of the inverse of SPY. So this, so I see a bearish accumulation, a bearish distribution phase for this, ending on around, lines up with the market pretty much the 27th to 28th, and getting as low as $40, but not really expecting that, more so around $44. So this looks like everything setting up here. We clearly peaked on March 11th in terms of fear at 60, and VXX has largely gone right down. This is nice to see. We are under, again, what I just said, SPY and VXX is inverse. I like to see it in different ways. We have crossed under 50 RSI in VXX, which is what you want to see. You want to see sellers of this, buyers of the market. Not exact science, but if you flip this would interpolate to 57 RSI for SPX. Can we get there? That would put you back above, just quick math in my head, over 590. So we will see. The 200-day moving average in this is just started going down. Look at that. It is essentially flat, but it is going down. It was going up and then going down. 47.56, 58, 57. So we'll just call it flat, and then it closed under it. So big significant change here. I think it finds where by the end of the week, I think it's at 44, and this 200-day starts to go down again. VXX volatility, not a place you want to be. Kind of like what I'm saying. Just don't be skeptical, kind of in that way, but obviously have risk management. All right, place not to be this week. KWEB down 6.5%. Today was up 40 bips, but this has not been a wonderful place to be since these highs here. So this was at $38 just on the 19th here, and we've gone to a 35 handle. So that's a story with KWEB. Of course, look at the chart. Largely an outperformer. This is specifically Chinese tech. Again, the better trade is FXI and getting broad China exposure. I think this is going to be an interesting correction that it's facing. I think this is in the penalty box for about 2 weeks. I want to see where it rests here. So the 21-day exponential is 35.80, right where it sits today. If you have a sell-off all the way, a correction all the way down to 33, this lower Bollinger Band, then these highs, that target of 39 going to new highs, is going to be a little bit more difficult and a little bit longer serving, especially if it's not the strongest alpha part of Chinese equity. But overall, you can see here above 50 RSI trading since January 17th, which I believe is the inauguration, and overall a great performer. That's why I said it's going to be interesting, because if it starts to get towards that 34, then you're going to have a break in technical trend through the RSI, going back to when it was under the 200 moving average. All the stuff lines up, and it's pretty interesting, and it just sees that you're in a different gear and you're not cruising it where you were before. Nice chart going into it. 37 high, 37.80, 38.30, and then it just hit a brick wall. And then with the U.S. starting to get its feet underneath it a little bit, this is starting to fall off. But KWEB, I think 33 is the lowest it goes. So that would be a pickup and an otherwise decent chart. I still do like FXI better. But KWEB, after volatility, after VXX, the second worst place to be. So they're getting in Ark. They're getting in India. They're getting in Bitcoin. They are leaving in this past week. Volatility, KWEB, and Silver, the absolute move is not as big. Silver is down 3%. Today it was down 20 bips. But again, these guys peaked on the 18th at 31.15, and it's had, I don't want to call it a plunge, but it's fell to $30 even. Silver peaked here October 22nd, so quite a while ago at 31.80. Gold has been the star. But overall, great looking chart. Ugly moments in time here from December 18th through, January 6th through the start of the year, and then it's got its legs underneath it. Not a fun week 4, down 3%, but silver can move. I think this is still in the penalty box for the next 2 weeks, and I think at most it sends it down to this 28.30 level. Let me move that to right around here. I think those February lows hold right there, 2013, and yes, because that number is higher, I think the 200 moving average is not in jeopardy, which is at $28, and that is your support. And I think that'll be your entry into, if you need some metals exposure. I think it'll hang in here, like I said, around 30, and worst, the correction will get to about 28.30 over the next 2 weeks. More than likely, though, it probably hangs in right around like 29.10, right around those levels here, which corresponds with your 50-day exponential moving average. So, in absolute terms, best 3 trades of the past 5 days. As we wrap up, did I get everything? Yes. Boopity, boopity, boppity. Yeah. Short volatility was your best trade of the past week. You would have got that 8.5%. Long ARK. So again, you're just saying, the worst is over, at least short term. Let me sell that uncertainty on the whole Trump tweets and the tariff scare and recession, all that. You sold that. That would have been the best trade in the entire market. And then the opposite way of collecting risk, instead of just selling it, you took on ARK. And that would have paid you the best in the market. And then you say, something is extended, short KWEB, and these they are the 3 best trades of the past week. Derivatives trades that stand out. You could have sold handsomely ARK puts. You also could have sold KWEB calls, 2 weeks out. I think they have like weeklies, probably have dailies. So some trades around that. And in terms of the VXX, if that is your fancy, you could also, have shorted or sold VXX calls. Alrighty, hopefully you'll be back on Wednesday with the stocks video if I'm not a 2 times dad by then. Otherwise, see you then. Peace. Go Birds.